Hey everybody, welcome back. It's time for another weekly update on the S&P 500 earnings, TSP in general, whatever. Uh, it's gonna be should be a pretty quick one here because there's not really much to report. We're already through the thick of earnings season, so the coming weeks are going to be pretty slow overall, including the one that we just had. So it actually makes for these presentations a little quick too and easier for you guys to handle. I will add in a little bit of extra analysis in here on just give it a little bit of chart analysis for you. Very just touch tip of the iceberg kind of stuff. Maybe a little bit of an intro for you guys. I'm not going to go real in depth with that. You can always go to our swing traders group and watch for the updates from Dario or some of our other members who like to do tech analysis in there, or also grow my thrift savings plan. I know Jerry likes to really cover technical analysis there. I focus more on the fundamentals. What are the earnings telling? Because whatever the earnings tell is what we should expect the prices to do over the coming quarters. I'm looking a little bit longer, further out than just what chart data is telling. All right, so that said, let's go through some of this information now. Okay, as usual, I want to start with where the S&P 500 C Fund, if you will. That's the index that C Fund follows. That's what the earnings data is suggesting right now, based on my system. Currently, I have the index valued at 42.95. That is where I think it is with just trailing earnings only. Doesn't factor in forward estimates. Actually, the forward estimates are factored into these 1, 2, 3, and 4 quarter ahead numbers. And as you see, the current value last week was at 42.90. It's up to 42.95 this week. And looking ahead over the next 4 quarters, it's projecting upward to 45.30, then 4700, 47.95, and 48.20. These are all up about 5 to 10 points over what I had last week, so still working its way upward. Again, we're not expecting such strong growth now as we were last year, but it's still decent. 12-month price estimate is at 50.85 now, which is up 15 points from last week. Ideal trading range is also up about 10 points or so, up to the 4,400 to 45.60 range now, up from 43.90 to 45.50 last week. In other words, that's the bottom and top prices where I think the S&P 500 could possibly be trading at reasonably. Outside that range is either maybe getting a little on the low side or getting too high or something. At least that's what the data seems to suggest. But again, my earnings data, my calculations are always a work in progress. I always have to make little adjustments here and there every so often. So could be. I mean, I'll have more on. I'll be covering some more on that here pretty soon in this presentation. All right, last week's updates on their effect on current value was plus 7 points, and I was expecting plus 8, so maybe a little bit less than expected, but not much. But also keep in mind there's some rounding issues going on there. Also, some companies changed their earnings dates. So some companies that might have been expected to report earnings last week ended up pushing back to next week. So that can also factor into that. So don't read too much into that. It's we're still expecting plenty of growth. All right, so far over the quarter, we have 447 companies that have reported earnings. That's 88.5% of the index. That is a substantial portion of the index's constituents. So, needless to say, we don't have much else to report over the rest of the months of August and September. Cover that some more here in a second. All right, total change to current value for this quarter is about 480 points. And about 87.5% of the companies that have reported already have reported positive performance. Well, basically, comparing this most recently reported quarter to the same quarter last year, 87.5%, which is a pretty staggeringly high number, if I must say. That's very, very strongly positive, to put it simply. All right, so looking on to weekly earnings updates expected over the coming 4 weeks. This coming week, 16 through 20 August, we got 19 companies on the schedule, or tentatively, and expecting about a plus 10 effect on CV. So again, not a very large jump there. Expect something, but just not a lot. All right, following week, 23 to 27 August, got 13 companies tentatively scheduled and only expecting a plus 2 or so effect on CV. Last week of August into the first week of September, got 9 companies expecting to report and only a plus 4 effect on CV. And 6 through 10 September, only 2 companies I have expected to report that week, and they're amounting to pretty much nothing. Flatline performance overall. At least that's what's expected. Doesn't mean that that's what will really happen, but that's what I'm expecting to happen. All right, total expected change to the current value over the next 4 weeks is plus 15. You add these up, as kind of adds up to 16, but again, I'm rounding. These are all decimal point numbers in reality, but I'm rounding them up or down as needed. So roughly about a plus 15 effect over the next week. That's not much to move on as far as earnings are concerned. Again, I'm going to have some more on that in a second here. Let me finish this slide and we'll talk about that. All right, so right now over the next year, the S&P 500 stock earnings yield, at least for my end, my calculation is about plus 12.22%. Still decent. I mean, so if you expect the earnings yield to go up, earnings to go up by about 12%, then we can reasonably expect that prices may also go up by roughly 12%. That's still a decent year. It's not astronomical like we've been seeing the last couple of years, but it's still decent. All right, expected bond yield, the 10-year Treasury note, basically here is 1.29%. We'll go a little bit more into detail on that one as well when we look at chart data. So hang tight on that one. And recommended stock versus bond mix for those of you guys who want to have a diversified mix of stocks and bonds in your TSP accounts, or broadly across all your investments. I don't care, whatever your interest is. And I still have it at 90% stocks and 10% bonds. Same as it was last week. Last week it did drop from 95 stocks down to 90% stocks. So gradually, as earnings yields basically drop or bond yields go up, this is going to shift gradually more toward bonds. So when it becomes a more legit reason to concern ourselves with the possible bear market, or not even so much a bear market as just thinking that bonds are just a better place to have money invested, where it can do more good for you than in stocks, regardless of which direction they're going. You're going to see that it'll bias more toward the bonds at that point in time. So that might help you guys out who, if you want to be kind of safeguarded against bear markets, where these will give you clues to that when they do actually happen. We're a long way from having that happen, though. Stock earnings yields would have to come down quite a bit, and bond yields are very low right at the moment. So anyway, that covers that part here. Before I move into the individual company stuff, for those of you guys who invest outside TSP, I do want to cover a few things that might be of interest to those of you guys, just TSP exclusive, as well as everybody else, regarding the chart stuff. Again, a little bit of intro to analysis. All right, so looking at the S&P 500 on the chart. This is a daily chart looking at over the last year. Really nice looking chart overall. Pretty consistent climb up here. Basically, the yellow line here is what you call a 10-day moving average. The red one is 50, green is 100, and blue is the 200-day average. All right, so we did see a couple times where it dropped down to close to the 100 average. before resuming upward. Dropped down to about the 50 there, but not much. I mean, that was in March. We haven't seen it drop to the 50 since then, or at least using my calculation process. Other people do tend to use different moving averages, like the 20-day and whatnot. Um, and they'll have the different reasons and merits for doing so. But either way, now I don't have a way to show volume on SPX because it's just an index. So what I'm going to do is show, maybe we'll do SPY. I tend to use S&P futures, but S&P futures also is open on days that the markets are not. Don't forget it here. I don't really see as much going on there. Let's look at let me go ahead and pull up S&P futures /ES. Might give you a little bit better idea there. Okay, so we got volume right here and an open interest. Uh, okay, so up in this area here, we had a little bit higher volume where that dip was at up here. There was more volume there, basically buy side volume it looked like, and had a little bit higher somewhat higher volume here as well compared to over the last week though. It's as you see here, the volume has been kind of low, and there's really not much volatility there. It's not doing a lot of movement. It's just kind of drifting its way upward, which makes me wonder what exactly is going on there. I think that it's a sign that we could be seeing a short-term top. That does not mean that I'm expecting a 10% or more correction. Okay, so it doesn't mean be nervous. For those of you guys who are who are in the buy and hold crowd, following Deb or whatever else, hold tight. You'll be just fine. Just forewarning you, don't be surprised if you see a normal size dip. 3 to 5% dip or something in price before it resumes, before it goes back up. Just wouldn't surprise me. It's although I do think prices could go up more, but the lack of volume and not much range there either with these prices here. If I zoom in on these, you might see that from top to bottom, the low price to the high price on each given day was higher over here back in earlier on the first half of July. And look like from here, looks like July 20, the volume started to drop. Look like July 21st perhaps was still a decent day. Had a few days in here and there that are decent volume, but overall though, the top to bottom range, I wouldn't really say it's as much lately here over the last couple weeks as it was prior to that. So not as much activity, and it means there's not very much going on for both buying or selling. And as long as prices are trickling their way upward, I would say there's more likely that we're going to see some preset orders preset sell orders on the top end there eventually before we see it hit some more buy side orders. Buy side orders are normally going to be down lower, like perhaps here at the 50-day average or something, 42.19 level right now, or it could even be down here at 44.05. Market did close, or actually, well, the S&P 500 did close at 44.68. You see, S&P futures though was at 44.59.75. And for those of you guys who, because we do post the S&P futures data a lot in the group, right here about is when the market closed. And so the last minute, 14:59 on my clock here. That's Central Time though. Closed at 44.62.75. So it's actually down 3 points between when the regular market closed and when the futures market closed on Friday. Again, the futures market does not close at the same time as the regular markets do. And in fact, the futures market will open back up for trading tomorrow, Sunday, in the evening at 6 p.m. Eastern Time or 3 p.m. Pacific. And it'll mostly trade 24 hours a day up until next Friday. That's generally how futures trading goes. All right, so moving back over to S&P. Okay, I'm going to go back to the daily. Again, I'm not going to go too in-depth. I don't want the video to be too long, and we have other people who can cover the more in-depth technical analysis if you're into that kind of thing. But I am going to put load the study set in here. I usually like to look at Rsi and Macd. ADX, which is what you call average directional indicator. I don't really want to cover that. It's actually a pretty low number, so it's not very basically not indicating a very strong trend there. You see, when it gets up high like that, generally that's when you see reverse directions. It's not always the case. I don't find ADX to be a very extremely reliable indicator, though, so that's why I tend to not really look at it too much. Let's get this out of the way, though, so we can get a little bit better look at the Rsi and Macd indicators, which are the two that I am most apt to pay any attention to. All right, so as I mentioned here, it's not much going on there with the range, and there's not much volume as was indicated by the futures volume this week. Something else to look at here. Okay, RSI, people use different parameters on this too, but generally speaking, a lot of run-of-the-mill, that the parameters are 70 and 30, which means if the RSI gets above 70, it indicates a possible overbought condition, and means that there's a possibility the price could drop. And when it gets down below 30, that's what you generally consider an oversold condition. These are not foolhardy numbers, though, so those are just kind of lines in the sand that just kind of gives you an idea if it's closer to one side or the other. As you see right now, it's at 68, almost 69 on the RSI, so it's getting up there. Gets up a little bit higher into that 70 neighborhood, and that's more reason to think that there is a possible short-term top coming. Also here, the MACD, you have basically the signal lines here. Actually, one of them's the signal line, the other one is the, the indicator line, I forget. It's basically two different, as you see here where it says 12, 26, and 9. These are different moving averages, a 12-day average, a 26-day average, and a 9-day, basically. And kind of cover that. I don't want to go into too much detail on these, but again, if you look here where we had a short-term top, what happened here, the blue line crossed underneath the yellow one, but it was already into the drop by the time it actually crossed. So instead, what I like to do is I usually I'd rather pay attention to this histogram here than I do at the signal lines here, or the signal line here. When it crosses under or over, that's usually when a lot of people who use this indicator decide to either sell out right here or buy back in right there. But this is one of these. This is a good example of why I don't recommend going by this, at least by itself. Because look right here where it crosses under it right there. And if you look up here, it's right where that price is. It's kind of a short-term low, I would say. It did continue down a little bit more, but not by a hell of it. But you had already missed a few days of drops there by the time that happened. And come back over here when it crosses back above. It's crossing over here at a short-term top. It's not only at a short-term top, but you're buying back in at a higher price than what it crossed under right over here. So you're losing on both ends. You bought back for a higher price than you sold, and then the price continues back down, and look at what here. It crosses again, and you're selling again for a lower price than what you bought for. That's a double loss there. And come back over here where it crosses again. We're at another high point there by the time you're buying back in. So for this reason, I don't recommend making trades based on these signal lines alone. In fact, I like to say more when you see that it's strong green or strong red. That's the time to make your move, not if at all. If you're gonna use this MACD indicator and make moves based on it alone, but I recommend always never just go by one single indicator. Like in this case, you had RSI way up high, 87. That's way up there. Okay, at the same time, we had getting kind of strong green there. As you see, it's brighter green. Didn't get that far up, but it was bright and not drab colored there. And those are both clues that right there might have been a good time to be selling. And sure enough, you look at the price itself, and it was indeed a good time to sell for short term. This is more for swing traders, though, for those of you guys who are buying holders. Yeah, if you don't want to play this short term game, don't worry about it. You're going to do just fine sticking with your long term gamer, right? But for those of you guys who are short termers who are watching this as well, this is why I'm covering this. All right, come down here, get to a short-term bottom there, and then RSI also got down to closer to the 30 point. And look what happened here. We hit a short-term low. That was a good time to buy back in, and price went back up. Um, Kind of a weak right. That's not a very strong one there, but RSI did get up right there. So, see, when RSI got high and also had brighter green there on the histogram, that was actually a good time to be making another short-term move. Again, though, we got TSP we're involved with, and keep in mind you're limited to 2 freebie IFTs per month. Interfund transfers, for these guys who don't know what that is, that's when you're moving the money around that is already in your TSP account. A lot of you guys already know this, but sometimes we always get new people around who don't know that. Okay, for those of you guys who are TSP exclusive, I'm going to finish the presentation that interests you guys up with this slide here. It's just showing what the GFCS and iFunds are doing in this particular month. Just only covering this month alone. Um, as you might see here, actually iFund has been kind of quietly outperforming the other funds. Since the month of August started, iFund's actually been performing all the other funds. It's at 2.61% gain for the month so far. And the second best performer has been C Fund at plus 1.71%, followed by S Fund at 0.28, and F Fund is negative 0.30%. So, again, that's an indication of weakness in bond markets and the general trend for bond prices to go, bond yields to go up. All right, so over the year, though, I know Deb already posted this data as well. As you see, our C fund is up at plus 20% already this year. Really nice year. S fund plus 14.36% and I fund 12.63. Okay, so for those of you guys who want to know how the top 100 companies in the S&P 500 did last week, I only had one to report this last week, and that's Walt Disney, DIS. They have a $329 billion market cap. They reported earnings per share of 80 cents versus 8 cents the same quarter last year, so that's a really nice jump. Trailing 12-month earnings are at 242 now. This is a non-GAAP basis. And looking ahead over the next 4 quarters, that 242 is supposed to grow to 323 and then 383, sit sideways at 383 for a quarter, and then go up to 444. That's actually strong growth expectation, and for that reason, because there's strong earnings growth expected, then we can expect better share price performance as well out of them possibly. So I have them as an impression of a 5 or a strong buy. So that might be worth adding to your portfolio if you don't already have them. If you want some good, strong performers, consider these guys. All right, now covering the top 100 that are reporting this coming week. This Monday, we don't have any top 100 scheduled to report at all. Tuesday, we got Walmart and Home Depot reporting tentatively. And then Wednesday is the busier day. You got NVIDIA, Cisco, Lowe's, Target, and TJX. Thursday, we got Applied Materials and Estee Lauder. And then Friday, you got Deere and Company. Okay, as you might, you might get the impression here that, which is true, that this is generally retail brick and mortar type, or mostly brick and mortar, but maybe some online stuff here as well. Um, but traditionally brick and mortar retail facilities here. We're all expecting to report this week. So this will give us some more clues about that aspect of the economy. All right, so not, like I say, not a hell of a lot going on. There is more. It's about 11 total for the week. So definitely busier next week than what we just had this week. Uh, and to be it. Okay, well, I want to thank you guys again for taking the time to watch this, and hope you guys got some good information and maybe some education out of this as well. I'll have some more information for you guys next week. All right, thanks a lot, and we'll see you guys later.